all yours.
Okay, were you gonna do that intro with the? Are you gonna do that at the end?
At the very end.
Oh, got it. Okay, all right. And you want to start now?
Yes, you can start now.
Prakash, I'm an alumnus of IIT from 1999. I have been involved with the Alumni Association for the last 6 years as well, and I'm presenting today on going from engineering to investing. So what I'll do is I'll just go quickly through a couple slides, and then I'm going to open the floor for questions. You can use the chat feature on the on GoToMeeting to send in the questions. That will probably be the easiest way, and then I can just read them and answer them. And then if anybody's question is not answered, or you want to speak up and maybe follow up, then feel free to do that as well through using the audio. So let me get started a little bit with my background. So I am, like I said, a graduate of IIT from 1999. I did aerospace engineering. I spent my summers doing research on fluid dynamics, and one with a professor in Boston University and another with the professor at IIT itself. And then I was very interested in fluid dynamics, but then I got introduced to a family friend at Hughes Space and Communications, which was a satellite manufacturer in Los Angeles, and did an internship with them. At the same time, I had admission to graduate school at Stanford, and so I did my internship with Hughes. I did my internship. So I'm getting some background noise here. Thank you. Okay. I did my internship with Hughes after graduating from IIT, and then I went to Stanford and did a summer internship there with a competitor of Hughes in the Bay Area, so I stayed local. And then I joined Hughes, which had been acquired by Boeing since I had been there, and worked there for about 4 years doing analysis, designing algorithms for controlling spacecraft, testing the software, planning some R&D, and then also got into some new business development. So and program management. So that got me exposed to a lot of different people who are from the business side of things, specifically the customers, and then the high-level program managers who were out there, creating the business case for these satellites. Some of these were commercial satellites like XM radio and DirecTV. Some of them were related to telematics. Some of them were government as well, but I found the most interesting applications, from the business side of things. So I thought that I would explore new options and new adventures, and so I looked at a few ideas. One of them was going to business school, and so in 2005 I went to MIT Sloan and did my MBA there, did a summer internship with a consulting firm, Boston Consulting Group. Found out that that kind of consulting wasn't for me, so I had an opportunity to join a private equity firm, which had been started very recently. So it was a newly formed firm and a chance to start a firm from the beginning with two others who were founders who had raised capital. And so I spent almost 10 years with them, and we raised two funds. The fund that was raised right before I joined, Fund 1, and then I became a partner for the second fund, which has now been mostly deployed. And so I stay on as a firm advisor and a board member for one of the companies. So then I also went out on my own and launched my own firm, which is just an advisory firm and looking at helping companies with getting to the next level, and also looking at investment deals as well. So this is my background here, and so some of the things I'll talk about are related to some of the experiences throughout these different companies and schools. So the title of the talk is from engineering to investing, but there's a lot of different ways to get from engineering to investing. So here's just a few of the ways, and these are the more common ways. So engineers can get a startup that does well and then get some credibility. Maybe you worked at Google or Facebook, and then you had exposure to some new business ideas, and then you could join a venture capital firm. You can also start a company, sell it, and then you're your own investor. If you sold it and made a large sum of capital from that sale, then you have your own personal capital to invest, and that happens quite a bit. And then there's the path to go to business school, and business school is often seen as a way to not only learn more about management and business, but to be a way to transition to a new area or a career, which is how I did it. I went from engineering to business school to a private equity firm. And there's often another route where after business school, it's much more common to join a consulting firm or an investment banking firm, and getting exposure to investments there, and then going into that PE or VC firm. And then there's a fourth way. It's less common for early in the career, but it's more for later career folks who transition to management, do well, lead companies, have profit and loss responsibility, manage a number of people, and then later they become what are called operating partners at investment firms. So they're very much in charge of making sure that the portfolio investments perform well, and so they're a crucial part of the process of investing and getting those companies to improve. So a lot of different ways to get from engineering to investing. The paths are not well defined, as I say here, but there are these are the common ways, and of course everyone can find their own way within their own network as well. So my viewpoint on engineering and investing is that good engineers can be good investors. There's two important skills that are shared that I highly value over the course of my career, and that's analysis and execution. So let's start with analysis, and this is not the analysis that someone might do as a math or science problem. This is analysis that an engineer does. So understanding how a system behaves. I give the example here, like figuring out how a sailboat behaves in the water with the different angles of the sail, with wind coming in different angles, and determining what's going to happen. Similarly, when you look at analyzing a company, you need to be able to look at that company and figure out how that company works. There's a number of questions that people talk about. What is the product? What is the competition, etc. But really, these are high level. What a good engineer should be able to do is go in and figure out how that company actually makes revenue. What are the costs associated with that revenue, and what are the fixed and variable costs to support the operations? How that company manages cash, how that company deals with its shareholders. All these things are important. So these are the inputs and drivers of value in the business, and you need to understand how they relate to the outputs, which is the revenue or the return on capital. So a lot of engineering analyses are done through simulation because they're very complicated. So similarly, businesses are very complicated, so there's a lot of inputs and outputs. But my experience is that an engineering simulation model is actually more complicated than most business models. So I think if you can be smart about understanding the dynamics of a complicated engineering problem, whether it's the sailboat example or whether it's an electric circuit or anything, then being able to understand that and comprehend the various inputs and outputs, whether it's errors or sensor errors, actuator errors, other kind of errors, uncertainties. These are things that are very common in engineering models, so these are also extremely common in financial and operating models. So I think that's something that engineers can be very good at. The second area is execution. So it's not just good enough to be an analyst. Those are an analyst in an investment firm is the lowest level of the totem pole. So an analyst by itself is not good enough. You have to be able to execute. This happens in engineering as well. So good engineering execution comes down to project and program management. What are the requirements? What are the functions that we need to get involved to satisfy those requirements? What are the final objectives? How do we show that to our customer, or client, or internal customer? And what's the schedule and budget that we need to adhere to, and what are the risks? So what are the technical risks? What are the execution risks? What are the program risks? The external risks? These are all things that good engineers and good project managers are always focused on. And so similarly, an investor who is managing an investment needs to be focused on these things as well. They need to understand the likelihood of closing this investment, because each investment takes a lot of resources to try to go after, pursue, to do due diligence on, to write up the definitive legal documentation on, to negotiate those terms, and to close the deal. And then after you close the deal, you have to manage the investment, depending on your level of ownership, of course. But some private equity firms like I was involved with were very involved because we own majority stakes of the companies. Other firms like venture capital firms don't own smaller shares of companies, yet they're still involved in the company at a very high level. So managing investment takes a lot of resources, and managing those resources comes down to classic project management. So I think that's where engineers who have good experience in program management can apply those skills to making managing investments. Now, there's one area where I see a big difference, and that's in the people dynamics. So this is where engineers sometimes might come up short if they want to become investors quickly. Where this is where the real the rubber hits the road, as they say. This is where the things get done in investing, and often in not just investing, but in any business, really. And sometimes it gets lost with people who are focused in engineering organizations. And I definitely saw this as I transitioned. So I kind of can relate to these comments. And that's how obviously I came up with them. But really, when you think about analysts, engineering analysts, or lower level project managers, they're mostly dealing with engineers and technical people. There's a similar type of person, and it's someone, when you're dealing with someone who's like you, it's much easier to get along and to get through to a conclusion. And so that creates efficiency, but it also can create complacency when dealing with folks who are not like you. So when you look at investing, especially when you're looking at buying companies and not of a variety of types, whether it's a services company or a manufacturing company or a technical company, there's going to be people with very different backgrounds. Some of these companies they've started 20 years ago. They've owned their business for 20 years, and that has created a different kind of viewpoint of the world and their business and their risk levels. And so these are all things that are really important to understand. You're going to deal with people who are sales managers who manage 20 people, and they have a view on the world, and you're going to deal with a variety of people. So understanding where everyone comes from, that empathy of background is very important to being a good investor, and connecting with these different people so that you can move your deal or investment project along further. And then a lot of the things get done through people skills like persuasion, trust, confidence, and building that relationship. So having the best financial model of a company is only a small part of the whole investment process. But really going into someone's office and maybe their business and saying, working with us, working with me as an investor will lead your company to doing better. How can you convince someone of that? It's not obvious. There's a large number of investors out there that are telling them the same thing. Most people who have good businesses get 10 emails a week from investors or PE firms, VC firms saying, work with us, we'll give you capital, and we'll take you to the next level. How can you, as an investor, differentiate amongst those folks. And then once you get in there and you've won their trust and confidence, how can you continue to win that trust and confidence, build a relationship such that you actually get an investment deal done? So, and this is true, I think, in larger companies where maybe there's the large company politics. You really have to be able to manage the people. So I think this is an important thing as engineers to work on, no matter what, no matter whether you want to go to investing or not. If you just want to grow in your profession and grow as a person, I find it extremely helpful to think about these things and work on them, to focus on your communication skills and persuasion skills and relationship building. And so, really my takeaway line is something that excites me about business and investing, is that you only got one shot sometimes to deal with people or to make a business decision. You can't rewrite it, and you can't recompile your changes, and you can't just start all over and change some of the code and get it right. And that we did a lot as engineers, especially when we're doing complicated software algorithms. But we really only have one chance to deal with people, and the first time at least. So that's kind of the overview, and I'm going to pause there and look forward to answering folks' questions through the chat. And I appreciate everyone's time. Please go ahead and type in some questions. Okay, we've got the first question. So please tell us about the company that you're on the board of and how that relates to your experience. Okay, thanks for that question. So the company I'm on the board of is a company called Sayers Technology. It's actually based in Vernon Hills, Illinois, for those in the Chicago area. It's up north of O'Hare. And what it does is it's based out to large companies like United Airlines or the Southern companies or John Deere, and they basically provide them with consult with them to design their data centers and enterprise security systems, and then sell them services and products around that. So products like HP servers or firewalls from Check Point and that kind of stuff. So how it relates to my experience is interesting in that it's a bit of understanding technology, because I'm an engineer. I can understand technology and understand how engineers think, and of this company's main asset is its engineers and its customer relationships. So having the ability to understand how engineers think and behave has been helpful in dealing with some of the executive level engineers and understanding some of their backgrounds and empathizing with their feelings, and so that's been useful. And then I think as a business, it's a services business, but it requires some detailed management and improvements in sales, marketing, all the categories that you'd expect in a services business. Okay, and then the next question was, did I get to meet Gale Sayers? And the answer is yes, I did get to meet Gale Sayers. So for those of you guys who are Chicago football fans, yeah, he's a great person to meet with, and a very positive person. So that was an enjoyable experience, and he even signed a football for us that I keep in my office. Okay, the next question is, can you provide an overview of the typical path from idea to VC to market? So there is really no typical path, I would say. I think some paths, examples are that you have your idea and you try to usually work on it on your own or self-fund it, like maybe get some family and friends to provide you with some capital if you need to. Acquire, if you're a software company, you want to acquire some cloud computing resources from Amazon or Microsoft. then you might need some capital to do that, but actually not a lot of capital. The costs of doing those things have really come down in the last several years, and so to get VC funding, like when I say VC funding, I mean institutional funding. There's an actual firm that has a fund that invests in you in a Series A round of funding, or maybe a Series C round of funding. Then it does require some kind of traction, some kind of evidence of product market fit, so that the investors can de-risk their view on the team and its investment in this company. So that's kind of what it takes. So usually and it depends on the company, it depends on the sector, what traction you need to show to show that you've de-risked the product market fit question. And then you want to show some traction on how you acquire customers, and sometimes it's for Series A it's not that perfect, and it needs to get better for later rounds of funding, but there needs to be some evolution from basically the idea to the company for a VC to get involved. But that said, if you can win customers profitably, you can also even fund your own company through your customers and their revenue. So that's another option. Okay, there's another question here, and it goes like this: now that quantitative and algorithmic models are becoming popular again in the investment space, has your engineering background been helpful in engaging in and or communicating to investors this type of investment strategy? So that's a great question. For me personally, it's not applicable because I'm focused on private company investing, and so there's not a lot of algorithms of trading like I think that you're referring to, but there's definitely analysis. And so having an engineering background, being able to quickly analyze things is where I see the most value. Understanding how a system behaves. I actually focused on control systems, and I view companies as large control systems. In fact, there's a topic or a subject that was kind of pioneered at MIT called system dynamics, and the founder of that was a guy named Jay Forrester, who recently passed away in his, I think, 90s, but he's the father of systems dynamics, and what he and others have followed with are that how to model the systems behavior of business and of non engineering interactions, and it's very, very much like a control system. So I think in that way the engineering background has been extremely helpful in terms of communicating how we do these strategies for the investors. I don't have a lot of experience in that, but I think that if you think about who are the leaders and the analysts at the firms that do algorithmic trading and focus on quantitative trading, you're usually finding PhDs in either engineering or mathematics or computer science. So it's definitely useful. I hope that answered that question. The next question is, when applying an engineering approach to due diligence, what source of business knowledge should an engineer seek? So that's an interesting question. So typically in due diligence, there's a couple levels. There's legal, checking all the documents and the taxes, making sure the taxes have been paid, and so I'm going to avoid that. I'm going to think about just business due diligence. And so for business due diligence, the areas are, whether you're an engineer or not, I think are, look at the customers, look at the business model, look at the financials, understand how they work. Now, as an engineer, you can apply those systems dynamics approaches and really have a better grasp when you're going through say you're going through an income statement and you're looking at all the various costs. You as an engineer should be able to figure out, so typically, and this may require some one step of knowledge here. So typically in an income statement, you've got your revenue and you've got your cost of delivering that revenue, and then the net of those two is your gross profit. And then you've got your operating expenses, and then the net of the gross profit and your operating expenses is your net income. So when you're investing, you want companies that have scalability, and maybe one metric you look at is high gross profit. But a lot of companies that maybe are not run by professional accountants or CFOs don't have the proper accounting of gross profit. So as an engineer, you should be able to understand that if somebody is accounting for a cost outside of the gross profit calculation, you as an engineer should be able to understand what the dynamics behind that cost are and figure out that, hey, that actually looks like a cost of delivering the revenue. And then I would, in my revised analysis, put that under a cost of revenue, therefore making the gross profit smaller and making this company less interesting than a company with larger gross profit. So that's one example of how an engineer can figure out relationships and dynamics of different things and apply them to business and figure out what is the right way to understand a business. So hopefully that's one good example. The next question is, what type of products and businesses are the next big thing, and what would you avoid? So this wasn't meant to be, I guess, investment advice here, and I hope that nobody takes it as such, because there's a lot of work to do. But I'm interested in space. I'm an aerospace engineer, and so although I haven't been directly involved with space companies recently, or in most of my career recently I have been, and I've gotten involved with the Space Angels Network, which is a network of people who enjoy space and want to invest in space. So I've gotten interested in following what's happening with the space industry, and I think there's a lot of potential. The costs of getting to space have been going down. The number of companies that are providing access to space have been going up at a very high rate. It's more than just SpaceX. So I would say space is is one of the next big things. Another one that I like is virtual reality. I don't know much about it, but I just see a lot of great things being possible with virtual reality. And these are both areas of that require strong technical and engineering expertise that any engineer could get involved with, and then maybe even become an investor in such areas. Okay, the next question is, what would be your advice to someone who wants to step into the investing world, and what are some of the first steps? So my advice is, first step is just build your network. The thing about investing firms and investors is no one's really hiring regularly. Unless you're a large firm and they have set programs, and unfortunately, IIT is not a feeder into those programs. They typically go to the Ivy League and Stanford and other schools. But I'd say Chicago is, if you're in Chicago or any major city, you're probably in a good area to network and meet a lot of investors and people in the startup community. So I'd say get out there, network, and be open to meeting people. Get to know what people are doing. What are some of the organizations that are fostering some of these events and relationship building, and get involved with them, maybe even as a volunteer. That's always the best way to build relationships, is to volunteer. So I think those are some of the first steps you would want to do. And then the key is don't think it's going to be a quick entry. It's a long game to get into investing. It doesn't happen right away. It requires a lot of work and building of relationships, and even the folks that I joined, even though I joined right out of business school, I had known those guys for over 7 or 8 years. So if you have a long-time friend or something as well in investing, then maybe that's a way to start and to quiz them and to learn more from them and see how you can support them, and maybe even for free, just to learn. But there's definitely a connection in all these steps, is that you just go out and meet people who are involved in the investing community to see what there is to do. Okay, next question is, what is your take on a CFA or MBA in order to get into investing from engineering? So I think both are good. Neither are required, but I would lean toward get these for the right reason. if you do what I just said and network and do all these great things, you can go become an investor without getting any of these. If you want to be in a more formal transition, then you may want to get one of these degrees or designations in the CFA's case. But consider the time commitment. An MBA, especially if you're going full time, it's 2 years of no salary and a lot of tuition. A CFA is a lot of study and work and probably some prep classes. So get them for the right reasons. Get them because you want to accomplish something. Get them because you want to expand your horizons, especially with the MBA. 2 years in an MBA program, you get to meet some amazing people. You get to make some great friends. You get some opportunities to travel the world. You get a lot more than just management education. Management education can be gotten from books and from online courses, but the MBA experience is what really brings that program, that degree to something special, and in my view at least. So that's what I would the advice I would give there. So to do it for the right reasons, and don't do it just to make this transition, because there are other ways you can make that transition. And then the next question is, what is your take on the CAIA, or Chartered Alternative Investment Analyst, or the CMT, Chartered Marketing Technician? So these are more specialized. I don't have a view on these, but I would say the same similar thing. Do it for the right reasons. If there's since these seem more specialized, and I don't have, unfortunately, to answer the question, a lot of exposure to these. If there's maybe a position that specifically requires this that you're in line for, maybe then that can be a driver to go get this. But again, I wouldn't say there's a definite viewpoint on getting these or not. And then this next question is, what is your take on the alternative investment space? And so, alternative investments can mean a lot of things. I think I view as alternative investments as anything that's not publicly traded, whether it's publicly traded equity or publicly traded debt. So it can be private companies, securities, venture capital, private equity. It can be hedge funds, which the funds itself deal in public companies and usually, but they also deal in currency and other things. But getting your capital out requires a redemption, which happens every 3 months. So, and then real estate is also part of alternatives. So I think as a space itself, it's I guess the question is kind of broad. If you want to feel free to make it more specific, I can try to answer that. But I think overall, my take is that it's interesting and it's challenging, and it requires a lot of work and study to understand. And so it's somewhere an area where an engineer could be do quite well. And so I think and public stock trading is also an area that requires a lot of analysis, and engineer can do quite well. But I think the ability to work under more uncertainty happens in the alternative space. And so that ability to deal with uncertainty, if you've taken that away from your engineering education, which is, I don't know what, for example, I guess in going back to my field of control systems, and so, there's a type of analysis called estimation, or estimating the behavior of a dynamic system. And so when you do estimation, you're basically looking at inputs and outputs and coming up with the way the system actually behaves based on that. And so you could call it like fancy regression, but it requires a lot of linear dynamics and linear algebra. And so I think private investments where there's not a lot of data and the companies haven't been disclosing financials or are audited, or there's a lot of uncertainty because it's really early in the company's life cycle, that requires you to be very good at becoming an estimator or a filter. And so I think that analogy holds well for the alternative space, and so that's why engineers who really become good at that kind of work can do well. Let's see. Next question is, in your view, what is the critical mass in terms of capital to start the investment in the investment business? So it really depends on what kind of deals you want to do. If you want to do, small VC seed deals that are maybe a couple $100,000 each, you could do 5 to 10 with $1 to $2 million, and that could be enough. And that creates somewhat of a diversified portfolio. So the key is to have a diversified enough portfolio such that you're going to maximize your chances of doing well. And so if you want to, if you say you're a specialist in manufacturing of a certain type of device, and you want to go out and buy 4 companies that play in manufacturing or the supply chain of manufacturing that device, then maybe you can be less diverse because you know a lot about that. So you can get away with 4 deals, and you're gonna, because you're buying them and they're small, you might need $10 million of capital or $20 million. So it really depends. I think you need a critical mass of capital that's going to allow you to make investments that are good investments that you see, and you don't want to go and see good investments and then say, I can't do that deal because I don't have the capital. And you also don't want to have only a limited amount of capital to do a couple deals where you don't get diversified. So those are the key driving principles there. The next question, I think, is maybe a follow-up to the alternative one, is do you see more of a merging of alternative investments into the traditional investment space? Yeah, I think so. I think it's becoming more common, especially with crowdsourcing and crowdfunding, that average investors can get into illiquid investments, which is how I'm defining alternative investments. And so there's definitely a trend here. There's sites where you can lend capital to businesses. You can lend capital to peers. You can invest in startups. You can invest in random companies that are focused on a certain area, like consumer products. There's all these websites that do this. So and then there's even, you can invest in real estate. So there's a lot of there is definitely emerging here with some of the laws that have been passed that allow the the crowds to fund projects. Okay, and there's another question here. What is your view on behavioral finance and the psychology that seems to be a bigger aspect of investing? Yeah, I think that's a good question, and it kind of deals with the slide that's on the page right now, is understanding how people behave and rationality, irrationality. When you deal with large enterprises, you're probably dealing with rational behavior. When you deal with small entrepreneurs, there's a chance you're dealing with irrational behavior. And so being able to understand that is important. For those of you who are still in the university or in graduate school, getting exposure to psychology and classes there in behavioral economics is really interesting and important to be good at anything you do, but it'll help you in understanding some of these aspects. Okay, the next question is success in personal stocks trading viewed well in interviews, or is it not interesting enough? If it is, which sectors of investing? I think that's a good question. I think it depends on the firm you're talking to. If you're talking to a hedge fund where they want you to make proposals on which stocks to buy or to sell or to short, then having your own view and history of doing that is important. When you're doing private investing with private equity firms or VC firms, it may not be as important. But the key is to have a point of view. I think every good investor has a point of view on something. And, it doesn't have to be the right point of view. It just has to be a definitive point of view or an angle. And so it's not like if someone asks you, what is your, what's your take on, the e-commerce space, then, if you're an investor, you should be able to say, hey, my view is so-and-so, and I think this is going to happen. And so that's where, if you're interviewing for an investing role, you want to be able to articulate your point of view and do it in a persuasive and convincing way. And you don't have to be right. And when I interviewed folks, I didn't care if they were right. I didn't know if they were right. I just wanted to know that they had some conviction and some reason for that conviction. They just didn't think one thing out of thin air. They just didn't follow the majority. They actually had reasons that were based on first principles or something related to the way the trending economic activity is going. So that's the full list of questions here. We can maybe pause and see if there's any others, but at this time, Nick Rokop is actually on the line, and Nick, not to put you on the spot, but Nick is the leads under entrepreneurship at IIT and at Stewart School of Business. So Nick, if you want to say anything regarding resources or other organizations, events, etc. at IIT and Stewart, feel free to jump on now on questions.
Can you hear me?
Yep, we can hear you.
Good, good. So thanks, first of all, for doing this. This is great. It's I enjoyed listening to you and your story. I mean, I'm an engineer too, a long time ago, and came into the business world. So different, but not altogether different story. I do some investing, but a lot of supporting and now teaching. So it's how do you go from industry to academia, huh? So I see that there are a number of people on. I don't know exactly who's on or from where, but if it's primarily alumni, we have our entrepreneurship center, which I used to run. I ran it from 2007 until 2013. Now a colleague of mine runs it, and that entrepreneurship center helps any of our students, staff, faculty, or alums to start and grow businesses. So we have all kinds of services, and one of the best things is that all the services are free. So I would encourage anybody on the call to just go on the website and look up the Entrepreneurship Center. KNAPP, Entrepreneurship Center. You can Google it, it'll come up very quickly. And there's a little registration link at the bottom of the website, and that works. The other thing that I would encourage everybody to do, I do this with my students and here locally, and no matter which city you're in, but Chicago is particularly good, as I'm sure Austin is. It has a lot of places that you can go to network. Oh, thanks for writing that down. I appreciate that. Can you still hear me?
Yep.
It says we lost you for a bit.
We can hear you.
Okay, good. So Chicago is great for this, as well as many other cities. They have really good entrepreneurial support spaces. Like here we have 1871 for the digital space. We have M-Hub for the physical and engineering space and maker space. We have Blue 1647, which promotes and helps diversity in the underserved neighborhoods. And there's a whole bunch of spaces like that. We have even a music incubator in the city. We have a almost anything social incubator and social investment, for example. So there's a lot of these kinds of places, and I encourage everybody just to do as much, go to these places and network as much as you can. So those are the two things that I would add right now.
Great, thank you, Nick. That's helpful, and I think there's definitely a lot of good resources. And for everyone, Nick had mentioned the NAP Entrepreneurship Center, so I typed that into the chat window so everyone can see it, how to spell it, and feel free to visit that site. So it looks like there's no further questions, and I will hand it back to Chanel. I appreciate everyone joining in here. I appreciate all the great questions. I think some of these questions were quite interesting. So I'll hand it back to Chanel, and thank you so much, and all the best to everyone.
Arun, I'm going to unmute the people on the phone just in case they didn't have the opportunity to type into the chat. Did anyone on the phone have questions for Arun? Okay. Okay, so I'm going to take back over the screen, so just give me a moment.
I think I have to give it back to you. Were you the first alumni relations?
Second.
All right, so the first. Okay, now the first one has it, and you'll have to hand it back to Chanel.
Okay, Jamie. Okay. Give us one moment. Okay. Okay. Okay, so can you all see my screen? Okay. Okay, so I just wanted to first thank Arun for doing this talk, and I would like to also thank everyone who's on the call for being so engaging and all of your questions today. I wanted to share some information about the next Hawk Talk. The registration page is not up just yet. It will be later this week, but it is Friday, January 27th between 12 and 1 o'clock. Same format. It'll be a webinar. We'll have Prasad, and forgive me if I'm pronouncing his last name incorrectly, but I believe it is Kodukula. He is a PhD alum in environmental engineering, and he's going to talk about his leadership journey from being an active employee to being an active leader at his company. If you are interested in reviewing this Hawk Talk and other past Hawk Talks, I've shared the link for our webinars, for our archive, excuse me, so you can get that information. And I also wanted to tell you about an upcoming event that we have going on in career services, the Career Crash Course. It will take place on Wednesday, December 14th. Between 12 and 6. If you're interested in finding out more details, I've shared that link as well. And if you have more questions for Arun or any of the other speakers, if you happen to look at those archived Hawk Talks, you can email those questions to the alumni inbox. And that address is alumni@iit.edu. Does anyone have any questions for me? Okay. Well, thank you all very much for joining us today. And you are free to go.